Hello friends, welcome to this investment banking tutorial from Wall Street Mojo.
And we have also looked at what is a pitch book. So this brings us to the last part within the investment banking function, that is restructuring and reorganization. And if you look at restructuring and reorganization, this becomes very important in the context of those companies which are about to go bankrupt, and they are facing margin pressures or cash issues, and they may want to reorganize very quickly. So they take help from investment banks, and maybe investment banks can help them strategically as well as restructuring the financial aspects of their equity and debt. So investment banks have a larger role to play. So there are two categories. One is reorganization and the second one is restructuring. Let us now look at why investment banks are important when it comes to reorganization or restructuring of companies. So why these two are required and when it is applicable for different companies. What happens is many a times companies may not be doing really good in terms of its business, and may be facing cost pressures, as well as they may not be able to pay their own set of cash obligations which may be related to debt, etc. So these set of companies, let's assume, are on the verge of bankruptcy. So what these companies can do is that they can actually opt for either of the two, or in fact a mix of both, one of them being called as restructuring and the other one is called reorganization. And for these two activities an investment banker can come handy. So what is restructuring and how investment bankers can help? So since let's say there is a huge debt that is piled up in company ABC. So a restructuring would mean that, let's say, selling off a part of the assets in order to kind of meet the cash obligations or paying off the debt. That normally happens. Second, it could be that converting a part of debt into securities. So that those who are bondholders, they would get stocks in return to the debt amount. And it can also mean that the company can be sold entirely. So investment bankers can help restructuring the original deal with the financiers, and kind of find a midway out in between. This is done primarily to rescue the firm from bankruptcy, which will ultimately lead to nothing but just a shell company where only the debt holders may be able to recover only a partial amount. So this is where investment bankers can actually be handy. Second part involves reorganization, and reorganization means that you're reorganizing the company's strategy altogether, maybe focus. So earlier maybe the company was into emerging markets, but probably they may not have the appetite for paying for such products which you are into. So just realigning the strategy from emerging markets to, let's say, developed markets, that can actually help. So investment bankers actually take a role of a consultant, analyze competition, help the management look at the new focus areas, and help them revive their financials. It may also lead to the change in management. So all these things, reorganization and restructuring, are done by investment banks for a fee. So it can be a standard fee, or it can be a fee which is based on performances. So that's where again investment bankers play a good role to look at. With this, we hope that you have now fully understood the restructuring as well. So I hope this provided a good glimpse different kinds of functions investment banking